In today's video, we're gonna talk about Uranium Royalty Corporation. We're gonna talk about the technical because the price is reversing now from the all-time low, the $17 now for around $39 at the moment. We're gonna talk about the fundamental why in coming 20 years most country will turn to nuclear energy as a source of energy, because everybody learned their lesson after the war between Russia and Ukraine and shortage in energy, that spike in energy prices in Europe. So we have to prepare in coming years and diversify our portfolio to hedge any potential drawback for the market, because as you see here from the pie, and all the blue chip company went down the last year. However, energy sector was booming and going higher and reversing from the bottom and going to all-time highs. So let's get right to it and discuss Uranium Royalty Corporation. So Uranium Royalty Corporation, or for short URC, is focusing on gaining exposure to uranium prices by making strategic investment in uranium interests, including royalty streams, dApps, equity in uranium companies. Like the last news that we have, that Uranium Royalty Corporation acquired Infield Energy and Corporation. This is in the last news that we have November 17 last year. We have more demand than supply for uranium last year. The shortage is 56 million pounds below requirement, and expected shortage in coming years in 2032 is expected to be 422 million pounds. And that's why Uranium Royalty Corporation is increasing the total physical uranium to over 1,500,000 pounds. And even recently they entered an into supply stream agreement with CGN Global Uranium to purchase 500,000 pounds of uranium for delivery at Cameco for 2 years. Future contract average price around 47.71 per pound. Fixed price. So let us watch this interview for the Uranium Energy Corporation founder and CEO Amir Adnani on Fox Business News, talking about the real national security threat that the US facing over too much Russian energy dependence, and stresses that the US must be in control of its own supply and destiny. So let's watch this video together.
President Biden's proposed windfall profits tax. One Wall Street Journal opinion piece calling this idea, quote, energy policy for dummies. Joining us right now is Uranium Energy Corp founder and CEO Amir Adnani. Amir, great to have you. Thanks very much for being here. What is your reaction to this windfall tax?
We have soaring power crisis in Europe, because in Europe there's been zero investment made and support from a policy point of view in having energy in your own backyard, being dependent on Russia. So now we want to tax our own energy companies instead of supporting them, instead of giving them more ability to drill. And we're doing the exact opposite.
I mean, you mentioned the event yesterday. The U.S. and the United Arab Emirates signed a strategic partnership to put that $100 billion into clean energy.
What President Trump did was to establish what we call today the National Uranium Reserve. This was the first time since the Eisenhower administration that the U.S. recognized the vulnerabilities that we have, the dependence that we have on foreign imports. The reality is the Communist Party of China and Russia have outsmarted the companies in the West when it comes to grabbing market share globally for nuclear energy. We got to get it back. President Trump recognized that. Today, all we need to do in the U.S., all President Biden needs to do is support domestic capabilities to control our own supply chains.
Exactly, we have to control our supply chains and never importing uranium from Russia and the other country. That's why we have a global diversified asset portfolio for Uranium Royalty Corporation in Canada, America and South Africa. The two mines in production, we have McArthur River and Down Lake. We see that McArthur River mine is planning to produce 15 million pounds of uranium per year starting in 2024. And Scott Mulby, the CEO of Uranium Royalty Corporation, or for short URC, he said by electing to receive physical uranium under this royalty interest, URC provides shareholders with unhedged exposure to future uranium price upside. The most important thing that uranium royalty have that the other don't is exploration and expansion upside without the associated cost. Let us watch this video for Scott Melby, the CEO of this company, discuss why the royalty model for URC company have more advantage and benefit for shareholders and investor in the future. So let's us watch the video together.
Royalty business model is special and different, and that potential investors need to be aware of what makes that different.
Sure. Well, we saw the enormous success that the royalty companies were seeing over the last 10, 15 years in base and precious metals, really becoming a go-to source of project finance, development finance for new projects and existing mines expansions. We also saw how appealing it was to investors to have diversified exposure. Listing on the NASDAQ last year really increased our trading volumes and exposure in the U.S. market.
Exactly. So expansion and growth is the main goal for this company in coming future. And the other thing that we have to discuss is the concern for investors regarding nuclear energy and the danger that come with it. However, the data tell us different story. As you can see from the chart, that nuclear have the lowest energy accident fatality, just below the 0.01 compared to coal and oil and natural gas, which for oil almost 100 accidents per year. So you see just from the data that the nuclear energy have the safest form of electricity generation. The global investment in nuclear energy generation is projected to average well over 100 billion per year mid-century. We have 426 reactors worldwide and 57 units under construction, and we have 3.1% expected demand growth for uranium. UK want 25 electricity from the nuclear power, and we have France building 6 to 14 new reactors, China approved for new 6 reactors, and we have UAE completed 3 reactors. So you see the more country is coming on board for building new reactors in coming years. This chart is Uranium Royalty Corporation rating history. There's something interesting because last time we have this rating of $1.60 Canadian was in 2020. Price was before this rating was around $1, and now we have the rating of around the $6, and of course the price is around the $3. So there is a potential double growth for URC in coming years, as analysts actually project. You see this yearly projection of the price action for the pie. We have Google, Amazon, all the blue chip company is significantly down. However, if we go to the energy sector, we see that many companies, you see here Oxy is ended the last year almost 100% green year for the energy sector. We can expect a huge return in coming years because many countries actually focusing on cleaner energy in coming future and replacing oil and gas in coming years. Last time we have the price for uranium was around 138, and after of course the financial crisis in 2008 and 2006 the price went down, and of course after Hiroshima event the price was around 70, then went down to the lowest around the $17 per pound for uranium. Then now we have a reversal in 2018 and beyond. So let us talk about the technical point of view price action for Uranium Royalty Corporation. We have 2 tickers, one on the Canadian market which is URC, and the other one on the NASDAQ, an American market, which is the ticker symbol is UROY. So let's start this one. On the Canadian market, URC have a support around the $2.83, which is a confirmed support, and you see this flag formed after we have a huge pump last 2 years. In December 2020 the price went from the $1 until the $5, find a bit of support and continue toward the $7 for URC and the Canadian market, and now you see it clearly say that we enter accumulation phase once again around this box between the $2.80 and the $4.60. So we expecting some volatility back. If we held the $2.83, we're gonna have a breakout from this flag and testing the $4.60. This is the first signal for strength. Then we're gonna go toward the $7.26. Let me just check the first breakout zone. Yeah, we have 30% price target around the $4.60. First signal for strength and breakout zone toward the $7.16. Around the $7.16, we expect over 100%. And of course, the $7.16 should be the breakout zone and profit taking. You know why? Because here we might see rejection and accumulation back down around the $4.60, then continue to go higher. I always talk about realistic price action here. And of course, this should be the bottom to confirm the bullish momentum continuation. In the big picture, you see we're still in a poor run and we're still holding a 100% that we did 2 years ago. For the other one, UROY, an American market and the NASDAQ have a support around the $1.83. So we need to hold this current support, and as well this one have a pump last 2 years in December, and the price went until the $3.76, then until the $5.90. However, in the meantime, we need to hold the $1.83 in order to confirm a breakout around the $3.76. The $3.76 is a confirmation for entering another pull run like what we did here when we escaped from the $1 mark. We have a huge bump, the almost 375% in the span of 2 years or even 1 year, and then the price went to gravitate down to have accumulation. So now still in big picture, we are in accumulation mode in this area. So this is accumulation mode between the $1.80 and the $3.70, and we're gonna have a breakout and pull run after we cleared the $3.76, and we're gonna have the test for this breakout zone and squeeze area for our stock to go toward the $7 and the $9 price target. Let me just check how much we can do from here for this 45% and 125%. Let me just put 2 alerts. For this one, I will put alert around the $3.76. This would be $3.85. This will be a breakout. And for URC, I will put it around if you are living in Canada, of course, if you want to trade this one, I will put it around the $4.74 for a potential breakout toward the $7. So what we learned from our video today: Uranium Royalty Corporation is the only pure play uranium royalty exposure. We have many projects in many areas, Canada, America, and South Africa, so that we have a diversifying portfolio. The emerging need nuclear energy and energy in the future, and this is will have beneficial royalty financing opportunities. Nuclear energy gaining broad acceptance in carbon constrained world, and robust uranium demand production have rebalanced market fundamentals. The most important thing, we have $1.5 billion for strategic uranium reserve over 10 years for US domestic uranium. If you have any question, let me know in the comment section below. Just know that I'm not financial advisor. You have to do your due diligence. That's why I put everything you want to need to know, the website for this, in order to do your due diligence and know more about this company. Hopefully that was clear and informative, and see you in the next update.